Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for WealthPress. Today is Tuesday. It is October 12th. It's about 7:41 in the morning. The market's going to open up in about an hour and 50 minutes or so. We're doing this nice and early. Now, the bond market was closed yesterday because it was Columbus Day, but it's open now, and it's up a full handle. It's up at 142.61. I expected the bond market to start heading higher, not because we're long the bond market. We are, but I believe the price is a little bit overdone right now. And I think because of the high correlation between the U.S. stock market and especially the large cap tech and the bond market, we're going to see some upside. Let me just put the RSI here so you could see exactly how overdone we are right now. We are really overdone on the bond market. You could see it right there. I mean, that is overdone. So I think we're going to have a little bounce up, maybe up to the 145, 147 level. And if the market crashes, I don't think it's going to crash, but if the market was going to crash, we would have a full-on rally. That was the reason why I initiated this position. Now, again, I'm using the word market crash. I'm not expecting the market to crash. This was just a hedge in case there was a small possibility, something unforeseeable would have happened, but I don't think that's there right now. Matter of fact, if you look at internals right now, they are looking fairly stable. Let me make some heads or tails out of this. We are now back into the zone of safety as far as momentum levels, as far as put to call ratio right now. There's no extra stretched out markets right now. According to volatility, we should be right below 20. That's a very, very positive sign, and volatility is declining. And on top of all that, not that it's a big deal, and the market's not opening up for another hour and 40 minutes, but the fact that the market is up, especially the Nasdaq stocks, is positive. Now, we're going to have the JOLTS report today. Today's Tuesday. Now, this week, the big report is going to be the CPI and the PPI, Consumers Price Index and Producers Price Index. But JOLTS reports tracks jobs opening and offers rates on hiring and quits. They're expecting between 10.8 million and 11.3 million. Consensus is just a little over 11 million. I think if we're in the high 10s like the prior or the low 11s, it will be solid. Looking at this again, tomorrow is the big report. We've got the CPI, we've got the FOMC minutes, and then we've got the, where is retail sales right here, and then PPI. By the end of this week, we're going to have a really good idea of whether inflation is really impacting the supply chain, whether inflationary pressure is moving across producers and consumers, whether it's being passed on or not, or it's being absorbed at a level, and we'll know the supply chain issues as well, and we'll have a good update on retail sales. Also, keep your eye on bank stocks. They are first to report. So let's talk about global economy real quick. Surging prices of coal, energy. More inflationary pressure. Oil prices have closed above $80, first time in 7 years. I remember somebody named 𝗧𝗴𝗀𝗀 and 𝗧𝗴𝗀𝗀𝗀 telling you guys about 3 months ago that energy prices are going to go higher. Energy demand has bounced back faster than output as economies recover from the pandemic, driving prices higher. So in terms of demand, it's becoming positive. The supply is the problem. Tech companies fell yesterday. Chinese regulators are back inspecting banks. I'm not seeing too much downside right now on the tech. It looks like we're bottoming out. Investors are looking ahead at earnings. As I mentioned, big bank stocks are going to be reporting. Companies in a wide range of industries are warning that supply chain problems, and I've been talking about this for 6 months, are impacting into higher raw material costs and crisp financial results for the rest of the year. The question is, how much of that is priced in, and how much are the earnings revisions going to be in anticipation or as a result of what we're seeing right now. Here we go. JP Chase delivers Wednesday, tomorrow. Bank of America, Wells Fargo, Citigroup, Thursday. So it's happening, and it's happening very, very soon. Also, Consumers Price Index on Wednesday and Producers Price Index on Thursday. That's what I was talking about. Inflation, the Labor Department relieves its CPI and PPI. Now, I talked about volatility. I talked about price. We are still, just so you guys know, we are not out of this danger zone quite yet. And I'll explain to you why. We are still in the twilight zone. That's the twilight zone, the area between the 50-day and the 200-day moving average. That is the twilight zone. And I'm expecting the markets to be choppy. Now, momentum levels are looking good, and the Russell 2000 is actually now trading right at the 50-day line, or a little bit below. Let me show you here. The 50-day and the 200-day are very close. So it's actually performing well. And if you look at momentum levels, you will see that the small caps are actually have a better performance on a momentum level than large caps. This is small caps. Small cap 600, 52% of the stocks are trading above the 50-day moving average, whereas the S&P 500 only 36 are. But if you do look at this momentum level, you will see that we are coming up. We're actually doing a lot better, and look at where we were. So as far as I'm seeing, this is a bottom, and we're going to be coming up. As a matter of fact, momentum levels on the Dow are actually even a little bit better, but this is very, very positive. This is a 20-year chart. If you look at a 9-month chart, you will see that we've been going higher. So as long as we don't bottom out anymore, we should be okay. These are weekly data, and we didn't go this low, this low, this low. It's better on a monthly. But you'll see that how many times do we reach these levels? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Now, if we go a little lower, let's go to the level we actually bottomed, okay? We went below the current level 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. But most of the time, notice when we come to these levels, we bounce back hard. And I'm expecting the market to bounce back hard because I believe most of the earnings are already priced into the market. Now, today is a big day because today I talk about important stuff. It's actually not a Wednesday. It's actually Tuesday. For some reason, I thought it was Wednesday. But today's Tuesday, and today, as I promised yesterday, I'm going to give you the strongest stock in the strongest sector and the weakest stock in the weakest sector. Doesn't that sound pretty good? So if you look at the S&P 500, at the 11 sectors, you will see that the number one sector is energy, and the weakest sector is utilities. So my job is to find you the strongest stock in the energy sector and the weakest stock in the utility sector. That's relative strength. So here's the energy sector right here, and the strongest stock, and I'll make this real easy. You'll see it for yourself in a second. I'll just go to my S&P 500 scan, and we'll go up here, Devon Energy. You could go with Diamondback or Marathon or even ConocoPhillips, but honestly, Devon Energy, DVN, is the strongest one. I've been bullish on it. I've been talking about it. I've been telling people it's been the strongest stock. It doesn't fail. We talked about it actually right here on 510 when price was at 25, and now price is reaching 40. Here's our green line, which tells us. So you can go back to the video on this day and actually look at it and so forth. But I like the stock. I would probably wait for a pullback to the 35-ish level. It's a little overbought right now, but I like this stock right now. Now, weakest stock is utilities, as I showed you utilities. Now, utilities, let me show you utilities. Where's utilities? These are utilities, and you'll see how nasty it's looking. I mean, it's just looking bad. I mean, look at that. Below the 200-day moving average, downtrend, listless, not a lot of directional bias, doesn't look all that great. And if we break this level here, which I don't think we will, we can go quite a bit lower. But as far as the weakest utility stock, Pinnacle West Capital. And just to prove to you that I'm not jive turking you, utilities right there. It's interesting that energy's up and utilities are at the bottom, but look at this stock. I mean, geez Louise. Now, I would wait for a pullback to the 71 level, and then I would then I would sell it again. But the bottom line is, wait for it to go above the $70 level. So again, just to review, put to call ratio is stable. Where's my put to call ratio? I'm showing you volatility, and I'm talking about put to call ratio. Real smart, right? So put to call ratio is now within a zone of safety. The S&P 500 overnight is, where is this? Futures are positive, slightly positive. Bond market is up a full handle after being closed yesterday, as you could see here, almost a full handle. So that's looking really positive. And volatility, as I showed you, is below here, and put the call ratio is also below. So again, I just wanted you to see all the factors that we're looking at. Things are stabilizing. It's just taking a little time. Once the S&P, the SPY, is trading above the 50-day moving average, it'll be much, much smoother. But for now, we're in the twilight zone and expect more volatility. But at least now you have my strongest sector, strongest stock, weakest sector, weakest stock. And I gave you levels to enter on the downside and the upside. Now, before I let you go, I've got something very, very important that you need to pay attention to. Legendary trader Tom Busby, he's widely considered one of the top traders and researchers in the industry. He's amazing. And after his 30 plus years of trading professionally, he's figured out a brilliant way to use a little known secret. Let's keep it between us. It's all thanks to a market loophole that has the power to create moonshot trades on 10 or 20 cent option contracts. Tom finds these loopholes on the secondary market. Now, some people have never ever heard about the secondary market. It's completely overlooked part of the options market that most traders and investors don't understand or even know exists. But thanks to Tom, everyone can now use it to access great trading opportunities and moonshot trades. I've never seen him as excited about these trades as I've seen Tom. I know Tom. Click on the link below and see how you can access Tom's Moonshot Trading Club and learn more about this little known secret. And make sure to like this video, subscribe to this channel if you're watching on YouTube. How else are you going to be the first to be notified when I post my next video just for you? And remember, tomorrow I'm going to give you one long, one short, actionable trade ideas. And don't forget, hottest sector energy, hottest stock Devon, weakest sector utilities, weakest stock Pinnacle. I always deliver for you guys. Bye and have a great, great day.